So my name is Jackson Vo. I'm the president of Gridmatic Retail. I just want to spend a few minutes telling you about Gridmatic, who we are, what we do, and really tell you about how AI can lower energy costs by increasing additional revenues. Gridmatic is a Cupertino, California-based company. We are both an energy company as well as a technology company. We blend the best of both worlds. So taking the brightest minds in AI and pairing them with deep levels of energy expertise. And at the core of what we do is we look at very large data sets, both historic as well as forecast. We run them through our power models, and we let the AI, we train it, we test it, we back test it, and we let the AI perform better and better forecasts of supply, demand, and effectively prices. And we can leverage this capability on behalf of generators as well as end-use customers. And something that I think differentiates us from many others in this space who also provide forecasts, we also use it for ourselves for proprietary trading. So here's a view of how that's going. This is a chart of cumulative profitability in the ERCOT day-ahead market. The red line is Gridmatic. Other lines are other energy players, names that you would probably recognize. But as you can see, as of the end of 2023, we were the #1 most profitable trader in the ERCOT day-ahead market. And it should be noted that this is not off the back of one weather event. This is just continuous improvement of the AI and our utilization of the AI each and every day. So I mentioned before, this technology can be leveraged on behalf of end-use customers. And large flexible load, like mining, is an ideal candidate for that. The ability to turn on and off relatively quickly opens up a lot of different possibilities. And I know today, many miners are already watching the real-time market and curtailing when energy prices spike. That's good. Reduces their costs. It also helps the grid in times of need. But I would submit to you that there is yet a better way. And to make this point, I'm going to rely on a meme. It's a classic. So if you're a miner today who's only monitoring real-time prices, you should take a look at day ahead. There are absolutely opportunities there and money that could be left on the table if you're not participating in the day ahead market. And to more finally kind of make this point, I wanted to kind of just walk through a day in the life of a Bitcoin miner. And this particular day was July 16th of last year. So what you can see here in blue is charted the real-time price on an hourly basis. You'll see that there's a spike at the end of the day. Not uncommon these days in Texas, particularly in the summertime. We have a lot of solar production now, and when the sun goes down, market gets tight. It creates this environment where prices can spike. So on this day, prices spiked. The dashed line represents a hypothetical miner. So in this case, the miner has a hurdle rate of $65 or a strike price. Anytime the real-time price exceeds that, they curtail. Now the question is, was this the optimal choice? And of course the answer is no. I wouldn't have anything to talk about it if this was the case. So during this day, the red line here represents the day-ahead price for a particular ancillary service. In this case, it's ECRS. So had the miner participated in the day-ahead market, they would have been paid revenue on this red line. And as you can see, the red line during these peak periods far exceeds the blue line, which is the cost. So therefore, there's a twofold benefit by participating in the day-ahead market. One is you get paid to stay on, and you can continue mining. And if you think that July 16th was an anomalous day, it wasn't. So we looked back at the entire quarter, Q3 of 2023, and for our hypothetical miner, they would have had to have curtailed almost 15% of the time. If you recall, last summer, particularly in Texas, very, very hot, most of August, triple-digit temperatures, and there was a lot of price volatility. So this would have set the baseline at 100%. Now, had this miner, our hypothetical miner, used our AI technology and optimized between day-ahead and real-time prices, they could have reduced their energy spend by 95%. And their curtailment would have gone down from about 15% to less than 5%. So it can make a big, big impact. None of this stuff, of course, is easy. You want to make sure that you bid when you should and don't bid when you shouldn't. And that's why it's important to have a robust forecast to guide you in that decision making. But having that forecast, it provides an optimization of uptime as well as a minimization of costs. And so if any of this has piqued your interest in any way, I'd invite you to please scan the QR code, learn more about Gridmatic. My colleagues and I will be here for the rest of the conference, and we look forward to chatting with you.